Hey guys, how are we doing? Crypto Insight UK here, bringing you back another YouTube video. So today, I'm going to just take a bit more of a chilled approach. I'm going to just discuss a few things because I essentially want to just talk to you guys about that I think nothing in the market has changed. And by that, what I mean is, I understand that people have been chopped out of positions. There's been awful liquidity events, but structurally, I don't think really anything's changed. And looking more towards the long term, I also don't really think anything has changed. This is Arthur Hayes this morning talking about Japan's economic package to tackle inflation. He said, translation, let's print money to hand out to folks to help with food and energy costs. These costs rose because we printed money, but he says this is insanity, but whatever, the yen to 200 and Bitcoin to $1 million. Yahtzee, which is obviously his favorite saying. So let's see what happens in Japan. Essentially, they're going to be printing money. And this is the thing. The trend in the world is a lot of problems, and the way they've been fixing the problems and continue to fix the problems, even as demonstrated by Japan with their new prime minister, is to throw money at it. And when you throw money at things, assets increase in value. Now, with that being said, I think that gold is close to, and I spoke about this in the newsletter, if not at a top. And why do I think that? And I'll show. Let's get into. And this is what I also think is very different between gold and Bitcoin. Is this structure is not the same. And people are saying, oh, the Bitcoin tops in. Gold's going to continue to go. I would argue if you zoom out, this is just on the daily, but if you go on the weekly or whatever. And look, I'm not saying the top is definitely in. I'm just suggesting this is what a parabolic run looks like, and this is something that we haven't seen yet in the crypto cycle this year or last year. We haven't seen this sort of parabola. It doesn't mean we have to get it, but every single other cycle for crypto has ended with a parabola. So you can't sit here and say nothing is different. The 4-year cycle, that's why the top's in. Nothing's changed, and then still not have a structure like this, which we've seen every time. And you can say, yes, the risk of the law of diminishing returns, as market caps get bigger, things don't go on parabolic rises. Gold is disproving that right now. And you can use the narratives, whatever narrative you want to use, inflation, monetary hedge or geopolitical hedge, whatever narrative, doesn't matter. The structure on an asset like this is what you're saying is the reason why Bitcoin can't do it, yet gold is at the minute 15 times bigger than Bitcoin's market cap, and it is printing a parabola structure. So Bitcoin and crypto can do that. That's what I say. And they can continue to give massively outsized returns. It doesn't mean they will, but it means that they can. Gold is showing you that, exactly showing you that. So going into those lower time frames, looking on the daily, for example, when you get into these parabolic moves, you do get big pullbacks to the downside. One thing we see here on the daily is the volume on red days is significantly higher than that on green, especially since like these highs potentially in inverted commas, because I don't know if they will be the highs, because when you get towards these highs like this as well, the volatility does like whip up, and you can see like madness happen. And that's not just for gold, that's just for like any asset class. Obviously those drawings weren't accurate as well. I wasn't trying to display an accurate representation, but what I'm saying is like it doesn't mean you can't do something like this before you start to continue downwards. But with the massive sell-off that we've had here, and I say massive, but we saw 6% in a day, that's significant. And let's say gold's market cap is, let's just zoom in a little here, hang on. Let's say gold's market cap is, I don't think off the top of my head, I think it's 30 trillion. It loses 5.68% yesterday. That's like nearly Bitcoin's market cap lost in one day. Just to put it into perspective, and that's if it's at 30 trillion, I don't know exactly. But I'm going to show you something else now, and a reason or something that I am looking at here, and the potential for Bitcoin to potentially increase in value as gold potentially starts to top. So I'm going to just shrink Bitcoin so the highs and the lows are roughly similar. I'm not going to make it perfect because it doesn't need to be perfect, but I'm going to show you what I've been seeing. So if we go from the lows, let's make Bitcoin a little bit larger. Again, it doesn't have to be massively accurate. It's just a trend. I'm not trying to show you like the perfect example. I'm just showing you the trend here, rough trend. we can see the highs and the lows are roughly the same. And what we can see though is, even though they are correlated, in fact directionally moving in the same, like directionally, they aren't correlated in terms of short-term price action. In fact, I would say they're the opposite. Gold gains market cap and Bitcoin kind of chops sideways or doesn't gain as fast. Gold consolidates, Bitcoin gains, gold consolidates, and then pushes higher, and Bitcoin consolidates for longer, and then Bitcoin catches up as gold consolidates, and then gold pushes up as Bitcoin pulls back, and then gold consolidates, and Bitcoin kind of tries to catch up, and then gold rips and Bitcoin continues to consolidate. I think Bitcoin's got a rip in it. We have seen, even if we just use this not accurate representation of price, every single time, this is the lows, we have managed to somewhere overlap gold price so far in these moves up. So if we were even to overlap, let's say here 50% higher or 47% increase ish from where Bitcoin is now, you could easily see Bitcoin coming up to 170 or 180,000 just using that really basic market structure there. And that's something that I'd be watching if I were you guys. And I'm going to take you down to the hourly to show you this almost on a let's just get this more large here to show you this on like a low time frame. If we look at my cursor, the Bitcoin low pretty much comes in as the gold top comes in, and then as gold starts to fall, Bitcoin starts to bounce off its low. And then yes, here there's a bit like of a question mark over Bitcoin's price action today, but as gold double topped, Bitcoin then found some more strength, and then gold obviously consolidated here. Bitcoin did pull back during gold's consolidation here, so that's the question mark. I do think that Bitcoin is trying to make traders whip in and out of the market and trying to worry people essentially. I think that when we get this market structure bill passed from the US government, when the US government come back, they're going to pass a lot of market structure bills, probably around crypto. And if you listen to macro analysts like Mike Novogratz, who's in the know whether you like him or not, he presumes by mid-November, which is only a few weeks away, which would line up to what I've been talking about with the Russell. I'm going to quickly show you the Russell. As I said, this is going to be more of a discussion video. If I show you the Russell, this is what I've been talking about. I should take you to the weekly before we go to the Russell. The Russell is something that people use for breadth indicator, showing when alts may or may not perform. So he said mid-November potentially for the market structure bill, and that would put us, well, currently I say we're like 19th of October is here, and we are now on the 20th of October week here, so we've got 2 weeks, essentially 2 weeks until it starts to break out, 2 or 3 weeks here, so 2 or 3 weeks time. Lines up pretty well with the Russell potentially breaking out. Anyway, what he's saying is he thinks that bill will come in then, and he thinks that pretty much every single legacy financial institution will have to get some exposure to crypto in one way or another, because they're not just going to let new companies come through and tokenize all of the things that they've been doing for so long without trying to take some sort of share in that. I completely agree with that thesis. I also think looking at Raoul Pal's thesis, where he discusses debt on a 5-year cycle, makes sense, and as to why I've got the Russell on a 5-year cycle here. And look, you can come and talk to me, you can say I'm wrong for whatever data points that you're referring to, and there are data points supporting the opposite of my opinion, but they aren't my opinion. I think that the trend for crypto is up. I think when you're in an uptrend, you look for long positions, and if it's a volatile asset, you buy spot, you don't get yourself washed out. So when you do, or if you do have drawdowns like we've seen recently, like liquidity events and whatever, which I think is probably one of the last ones that they'll be able to legally get away with, because you don't have all these infrastructures yet in place, and these market structure bills. So who's going to go digging after things when you don't have the legislation in place? And when that legislation comes in, they probably can't mess about with the system as much as they are right now. And you can say, yeah, look at the S&P like it's in a bubble. I agree. But you can also then refer back to debasement of currency. And I don't think this looks too extreme in comparison to like history. Like this is from 2009, we've basically just chopped directionally upwards. Where does the capital go? It's going into US equity markets. There's a lot of capital to rotate into crypto. This is a bubble structure, but trying to guess where the top would be is going to get you burnt, in my opinion. I think there's a lot longer to continue, or at least there is further to continue with the S&P. And I also think that gold's bubble structure went higher than I thought it was going to, at least to start with. This is the weekly for gold. Let's see if gold pulls back and rotates. We've shown that correlation. Basically, what I'm trying to show you is, guys, is that there's a lot of money out there that, one, could rotate into crypto, and two, is still being applied to markets. We're also then printing money from countries like Japan, and I think the US probably going to do the same. The UK and Europe pretty much in different weird similar positions in a way. I think that market structure bills are going to allow a lot of this capital to flow into crypto. I think that gold, for example, is seeing the last people to buy come into the market. When you see retailers queuing up outside gold stores to buy gold, who else is left to buy? Who do they sell to? And I think that that's the opposite narrative almost for crypto. I think retailers like retail investors like us, who have been in the market for a long time, are actually getting a chance to front run the institutions because they haven't yet had the legislation. Has been, in quote unquote, if you look from legacy financial terms, the Wild West, and I think that is about to change. And I think that opens a massive amount of capital to come into the markets. You either believe that crypto goes to zero over time or goes to infinity, because, and I say that very honestly, it's like, well, it will go to zero if it doesn't go to almost infinity over time, because people would lose interest. Let's say if it just chopped around over time, something else would come out that would start taking investment, and crypto would sell off. So they're your two camps, essentially. If you're in the infinity camp, okay, well, you can try and time a high and sell and potentially do well if you do get that. But in my opinion, that's a massive risk. Why would you take that risk when you think that it's going to go to infinity? You probably just add on dips. Or if we get a parabolic run, then maybe take some profits off the table, which I don't think we've had yet. And I also don't think we've really had an expansion yet this cycle, and that's proven by total 2, total 3, the relationship of that with the Russell. And every other cycle, if we go by the 4-year cycle terms, we have seen that expansion in total 2, total 3, drawdown in Bitcoin dominance, as I'm showing you right now. Now, just to finish off this video, because I just want to not make it too long, I'm going to show you trading different, which is going to give us some liquidity pools, and we're going to look at Bitcoin to start with. I'm going to take you just the daily first on Bitcoin. Let's take us to the daily, because I want this to just show you my extra thoughts. Liquidity is sitting above us on the daily, undisputable. There's liquidity above us, and it's being drawn away from down below. We've seen this before. I wrote about it in the newsletter, meaning that we are seeing long positions close out and short positions continue to open. 80% of the time, price gets moved into these areas of deep liquidity. Why is that? Well, that's because market makers and exchanges alike make money when when price moves into these areas, because they have contracts that are opened and closed, and they both make fees on the contracts, essentially. Unless you think that this is going to be the one of the 5 times where that doesn't happen, then fair enough. But every single time, especially when we've seen liquidity of this scale, we get a move into that area. So I think that is coming, and I will continue to beat that drum. That's what I believe. Now, whether it comes today, tomorrow, whether we have another flush out, whether you want to sit there and panic about 4-year cycles, again, I have no idea in the short term. No one does. We make our best guesses, and we also don't just guess on where we think price is going to go. What we do is we find areas where, if price goes to that area, then it's the best place to take a trade in regards to risk to reward based on previous structures. And you can say, and if you zoom out a bit further, you can say, look, you don't want Bitcoin to go below, let's say 94k and close below that, because then that will violate larger structures. But in the short term, unless you're a really, really, really successful scalp trader, and I wouldn't be scalp trading these whipping markets, no one knows whether it's going to go up, down, or sideways for the next hour or 2 hours. I really don't think they do. Not to the same conviction as you can have on a larger time frame, because you can see the trend, and also larger time frames give you more conviction. But what we do when we look for leverage trades is, let's say I would be looking at taking a leverage trade maybe at like 97. I'm not saying that is where I think the price is going to go, but if we get down there and I know I don't want my close below 94, then I put my stop loss maybe a bit lower than 94, 92, in case we get the wick down to 94, for example. But then you probably put in your take profit if you go to then look at the daily. So if you go to then look at the daily, you'll probably be putting your take profit all the way up here, like the 140 sort of mark, and that's going to give you a massive risk to reward trade. Let's say you enter here. Is that a short? No, it's a long. Cool. So you enter there and you put your take profit there, and you have, where are we? You don't want it to close below like 94. Let's say this area, I don't want it to close below. Put your stop loss in there like that, and you enter into maybe this liquidity. Maybe you make your entry here, give yourself a bit more on the old stop loss. Look at this trade, for example, is a 9.5 to 1 risk to reward. That means you can take that trade 9.5 times, and you only have to be right once to make money. There you go. That's how trading works. It's not necessarily that people know that the price is going to go one way or another. You put those things into a basket to give you more probability that you think the trade's going to go into your area. You then use areas that you find as support and resistance and other tools like this, like liquidity, to give you entries into those areas, and you just try and play the game of making more return than you do risk over time. That's what trading is. It doesn't mean that anyone's got a crystal ball. People get things right, people get things wrong. It's not a perfect game. There's no perfect traders. Anyone who's trying to tell you that anything like that they're anywhere near perfect is probably selling something to you, and it's bullshit. So that's how I look at the market. I think if you look at altcoins, I think they're the best places for return at the minute. Doesn't mean that liquidity can't get sucked into Bitcoin as Bitcoin goes on this rise. I think it will go on. But the risk to reward again in altcoins is high because they haven't seen that drop in Bitcoin dominance that we've seen previously. The Russell hasn't broken out. We haven't seen really expansion in total 2 or total 3 yet. Doesn't mean we'll necessarily get it, but as we start to see institutions come into the space and crypto start to amalgamate with traditional finance, that's where I think that altcoins will come into their own, because I think you're going to start to see them be utilized by legacy financial companies, either to start with for speculative reasons, and if not for structural and financial reasons, looking at things like what Ripple have done recently with the purchase of a treasury company, purchase of a stablecoin company, purchase of a broker-dealer, and then starting a $1 billion XRP fund. Like, all these things would suggest to me that XRP is going to be potentially used in one way, shape or form for traditional financial services, and that would hopefully boost the price over time. That's the way I think about things. Okay? So with all that being said, guys, I hope you enjoyed the video. I hope you understand where I stand in the market. I'm not saying that Bitcoin is going to come down to these prices. That's where I would potentially take a trade on Bitcoin. But I think the risk to reward is much better in alts. But I think you can just hold them spot, because if I'm right with my thesis on spot altcoins specifically, let's just go back to TradingView to finish this video. And this has been quite a long one now, but I haven't made a video in a while. And I thought, cool, I'll come and chat to you. Let's make this thesis for altcoins. I do think the top like 20 to 50, 10 to 100, altcoins 10 to 200 is where you should be looking, because they have lower risk in inverted commas than something that's got like little to no market cap and no like time in the market. But you can still do 10, 20, 50, 100x if you pick the right ones. So I would also always stay within those sort of categories. But we see that historically, Bitcoin dominance has dropped 46% or 49% previously, and actually, if you take that cycle from the very start, Bitcoin dominance dropped from like 96% all the way down to 35%, for example, for around a 60% drop. Then we've got all this capital to rotate into altcoins, and if you say that Bitcoin's at, let's have a look. If you say that Bitcoin's market cap, let's say Bitcoin. That's going to give me price. BTC. What's Bitcoin's market cap ticker? Will I cannot think right now. Bitcoin market cap and dominance. Don't want Bitcoin dominance. Bitcoin market cap. Here we go. 2.15 trillion. And if you look at most altcoins, like for example, let's just take XRP. XRP's market cap is 1.42 billion. Bitcoin's market cap is 20 times that of XRP. So if 40% of Bitcoin's market cap rotates out, just for the ease of discussion, that's going to be $1 trillion, which obviously you're not going to add it all to XRP's market cap straight away. Maybe you do, but that would give XRP the potential of like an 8x return, even from where we are right now, if that all flows into XRP, and XRP is one of the larger market cap altcoins, and that's what I'm trying to say is, sitting in spot, you still can hit an 8x on something that's in the top 10. yes, you need the liquidity to align and things to push into that. And by the way, I think we do go to like $8 to $12 on this next leg and potentially higher for XRP, just to have that discussion, which is a segue. But there is a lot of capital to rotate, and to obviously have a market cap token that's much smaller. Let's use Flare Networks for an example. Let's say that's at like $1.8 billion, and you've got a trillion. That's where you could see things like 100x for an asset like that, and that's why less leverage, betting directionally, looking at the best risk reward areas to buy, having conviction, doing your research, and then sitting and holding and continuing to back your conviction or challenge your thought process, and to see if you still align with what it is, and then if they all are yes, then hoping that price action catches up with the thesis. If you think you're early, because that's essentially what you're betting, you can make a shitload of money. You literally can, and I've proved it, and that's what I've done so far. Doesn't mean that I will continue to be right. The top could be in. I don't think so. That's why all my bets are still on the table. But now I hope you understand the thesis for the long term. The reason I wanted to come and talk to you is because I know there's a lot of like negativity and all this sort of stuff out there, but I'm telling you exactly where I'm standing, what I'm doing, and how I'm feeling about it. It's not easy to be on crypto Twitter at the minute. I know it's not easy to hold altcoins specifically, but you've seen the reason it's not easy is because they haven't yet done anything. It doesn't mean they won't. People are telling you, oh, it's over, they're never going to do anything. But if you look through history, if you use their same thesis to say, oh, it's over because of this, which is a 4-year cycle, then you can also contradict that to say it can't be, because in that 4-year cycle, we always had altcoins outperform. So what they're saying is fundamentally wrong, because you can't have nothing has changed and then them also argue that something has changed by altcoins not being able to outperform. So that's where I stand. I hope you enjoyed the video, guys. If you did, please hit the like button, hit the subscribe button, share it with a friend. If you got any questions, let me know in the comment section below. If you want to trade on a decentralized exchange, on a centralized exchange, I've got a link to WeX and MEXC in the description below. Obviously, be careful with exchanges. I'm a little bit worried about Binance at the minute personally, which will affect other exchanges if there is an issue there. I'm not saying there is, but I am a little bit worried. But with all that being said, hope you enjoyed the video. Nothing I say in these videos is financial advice. But yeah, as I said, stay safe out there. Don't do anything too rash. Potentially the gold tops in, and if that is, then we could potentially see rotation into crypto. I've shown you that correlation since the start of this cycle. Fingers crossed. We're all in the same boat. Let's look at maybe mid-November. We've got the potential for the legislation to come through. That's when the Russell went 5 years ago using Raoul Pal's 5-year cycle, now not 4. And maybe some capital to rotate from gold, and potentially some deal being done between China and the US, and maybe even Russia and the US. Let's see. Peace up, A-Town down, as Crypto Insight EK would say.